Hello folks, welcome back to my channel. Shares of Tesla, one of the past year's best performing stocks, continued to rack up massive losses after Chief Executive Elon Musk over the weekend sparked concerns that he would sell 10% of his stake in the electric car maker, casting doubts on the long-term viability of the stock's meteoric gains. With another important drop today, Tesla has now dropped more than 12% since CEO Elon Musk announced that he would sell 10% of his stake. It's not clear whether Musk has started selling, but his brother, Kimball Musk, managed to sell $100 million just before Elon publicized his withdrawal. Last weekend, Elon floated the idea that he would sell 10% of his stake in Tesla if a Twitter poll would agree, which it unsurprisingly did. It put a stop to Tesla's historic rally that saw its market capitalization of over $1 trillion. Today, Tesla had its biggest stock price crash in a long time, dropping by as much as 10% intraday. Musk selling Tesla shares cast a negative shadow on the stock, no matter the reason he gives for it. But with the kind of volume he is talking about selling, the actual selling pressure could also contribute to the crash. As of last week, the CEO was holding 170.49 million Tesla shares, which means that 10% is 17 million shares, or about the average daily volume of Tesla shares exchanging hands. Today, Tesla's trading volume surged to 35 million shares by midday with massive sales at around 10 a.m. It's unclear whether Musk has started selling stocks, but it's clear that a lot of people are, including his own brother. Kimball Musk is a Tesla director, and therefore, he has to disclose if he buys or sells Tesla shares. He recently disclosed having sold 15% of his stake in Tesla, which is worth just over $100 million. Tesla is the leading manufacturer of electric vehicles. Through the first 8 months of 2021, the company held 13.3% market share, and despite significant supply chain headwinds, Tesla managed to produce 237,823 cars in the most recent quarter, up 64% from the prior year. That's impressive, but there is a more the important story under the hood. This company is becoming one of the most efficient automakers in the world. In 2017, Tesla introduced the 2170 battery cell, capable of storing 50% more energy than the previous 1865 model. In fact, CEO Elon Musk said it was the highest energy density cell in the world, and also the cheapest. More importantly, this technology means Tesla pays just $187 per kilowatt hour for its battery packs, the most expensive part of an EV. That's 10% less than the next closest competitor and 24% lower than the industry average. In 2019, Tesla opened the Gigafactory Shanghai, manufacturing the first Model 3 less than 10 months after breaking ground. This helped localize its China business, cutting costs by reducing the number of cars shipped across the ocean on boats. It also boosted Tesla's total production capacity, which now sits at a theoretical 1.05 million EVs per year. Collectively, these moves helped Tesla cut the cost per vehicle from $84,000 in 2017 to $38,000 in the first quarter of 2021. At the same time, the company delivered an industry-leading operating margin of 6.3% in 2020, and that figure has ticked up to 14.6% in the most recent quarter. Not surprisingly, Tesla's financial performance has been impressive. In fact, the company has posted a positive GAAP profit for the last 9 consecutive quarters, and its top line is growing quickly. Looking ahead, investors should expect this momentum to continue. Tesla recently announced the 4680 battery cell, a new model that will cut cost by 56%, extend range by 54%, and reduce capital expenditures by 69%. The company also plans to open 2 new factories later this year, further boosting its production capacity. Moreover, Tesla has established itself as a frontrunner in the race to build an autonomous vehicle. In fact, Musk believes the company will have a fully autonomous $25,000 EV on the market within 3 years. Once that happens, Tesla plans to start an autonomous ride-sharing service, pioneering a market that ARK Invest values at $1.2 trillion by 2030. And Morgan Stanley analyst Adam Jonas believes Tesla could launch a flying car business by 2050, addressing a potential $9 trillion market. In short, Tesla is pushing the boundaries of modern technology. That's why I plan to add to my position during the next market crash. Though Musk remains the richest person in the world, His fortune tanked by about $33.7 billion Tuesday, falling to $271 billion and racking up two-day losses of nearly $50 billion. Triggering the two-day stock decline, Musk on Sat called on Twitter users to help decide whether he should sell 10% of his roughly 23% stake in Tesla in response to a short-lived proposal in Congress that would have taxed billionaires' unrealized stock gain to help curb tax avoidance among the ultra-wealthy. Despite the sell-off, analysts at both Wedbush and Jefferies increased their Tesla price targets on Monday to $1,800 and $1,400 respectively, with Wedbush's Dan Ives saying the stock could soar as much as 65% over the next year thanks to better-than-expected profit margins unveiled in the third quarter. But other analysts aren't so sure. Tesla stock holds an average price target of $810 based out of 35 firms issuing such guidance, according to Bloomberg, representing about 25% downside to Tuesday's closing price. Musk's weekend tweet sparked investor concerns that Tesla's stock could struggle to hold on to its recent gains amid a massive liquidation after the poll closed with nearly 58% of the more than 3.5 million respondents voting in support of the proposal. Musk, who pledged in a separate tweet to abide by the results of poll, owns about 23% of Tesla's total shares. On Monday, Ives said investors should not be overly concerned about the possible transaction because it was already expected that Musk would sell about 6% of his stake to help pay a big tax bill coming due from stock options set to expire next August. In a note, Onda analyst Ed Moya also chalked up Musk's motivations to the impending tax bill. In 2020, he sent Tesla's stock into a temporary swoon by tweeting Tesla's stock price is too high IMO. Despite that tweet, the stock rose more than sevenfold in the subsequent 18 months. Thanks to his ownership stake in Tesla, Musk's worth is close to $300 billion today. He and other billionaires have been criticized for avoiding paying any federal taxes on such huge stock gains. A couple weeks ago, Musk, addressing the criticism, posted another tweet. Much is made lately of unrealized gains being a means of tax avoidance, so I propose selling 10% of my Tesla stock. Do you support this? After a majority of 3.5 million respondents answered yes, Musk started to sell some of his Tesla shares. As of Friday, he had sold roughly 8.2 million of them and raised close to $9 billion, according to filings with the SEC. On Wall Street, there is a good deal of skepticism about Musk's stated reason for selling, that he wanted to pay his taxes. One theory is that he was already facing a substantial tax hit because he is exercising a big chunk of additional stock options that were granted to him in the past, when Tesla's stock price was much lower. There's no way to know for sure why Musk is cashing in some of his Tesla stock now, but there is another potentially very simple explanation that shouldn't be overlooked. It's the sensible thing to do. Having been CEO of Tesla since 2008, he has extensive first-hand experience with the global auto industry and the challenges that it presents. Presumably, he also has a good idea of what Tesla is really worth, and, based upon his tweet from May of last year, its true valuation bears little relation to its current inflated stock price. Of course, there is always a chance that the stock will go even higher from here, in which case Musk is potentially leaving money on the table. Ultimately, though, there is the lesson of history to consider. Eventually, bubbles pop. And when they do, it isn't pretty. That's true of bubbles in individual stocks, in industry sectors, and in the entire market. During my chat with Samuelson all those years ago, he compared the bursting of a stock bubble to a great accumulation of snow giving way. All bubbles are vulnerable, he said. We just don't know when the avalanche will happen. Musk isn't waiting around to find out. On Monday, Wall Street initially rose on the news that President Joe Biden has decided to appoint Jerome Powell, the chair of the Fed, to a second term. Under the central bank's congressional mandate, Powell's primary focus is to curb inflation and expand employment, but the Fed's actions have enormous sway over the markets, and it is just starting to wind down some of its pandemic-related monetary stimulus. While Powell and his colleagues figure out what to do next, ordinary investors might be wise to follow Musk's lead and bank some of their recent gains. Crucial quote, "We would rather Musk rip the band-aid off now and sell this portion of stock rather than it lingering over the next year and feeding into any bear thesis," Ives said Monday. Tangent, since Tesla went public on the Nasdaq exchange in 2010, Musk has only sold stock twice. In July 2010, Musk sold slightly more than 1.4 million shares for $24 million, and in 2016, he sold another 2.7 million shares for about $593 million. This is all for today, folks. If you enjoyed this video, then leave a like, and if you are new, Then don't forget to subscribe. Stay tuned for the future updates. See you till the next video. Thank you for watching.